So what are the quarters and how do we actually derive them? Many of you know that a quarter is a 1 or 4 equal parts of something. It could be 1/4 of an hour, 1/4 of a kilo, or a pound, or with money, it is the US or the Canadian coin that is equal to 1/4 of a dollar. The quarters theory focuses on the 1,000 pip ranges between the major whole numbers in currency exchange rates and divides these ranges into 4 equal parts, or 4 large quarters. Each 1,000 pip range contains 4 large quarters, and each large quarter has exactly 250 pips. The numbers that mark the beginning and the end of each large quarter are given the name large quarter points. The large quarter points that coincide with major whole numbers are also called major large quarter points. In this particular example, of course, the major large quarter points, they represent critical junctions that signal the end of a previous and at the same time the beginning of a new 1,000 pip range. The exact half point of each 1,000 pip range also coincides with a large quarter point, and it is called the major half point of the 1,000 pip range. In this example, once again, we're looking at the 1,000 pip range between $1.30 and $1.40. When we divide that range, we will get 4 large quarters of 250 pips each, between $1.30 and $1.3250, $1.32 to $1.35, $1.35 to $1.3750, and $1.3750 to $1.40. Major half point coincides with the large quarter point as $1.35, and $1.30 and $1.40, the major whole numbers that define the 1,000 pip range, are also called major large quarter points. The 100 pip ranges, we said, are the ranges between 2 whole numbers. Those are also very well clearly defined ranges, and they can also be divided into 4 equal parts, or 4 small quarters of 25 pips each. Let's take a look at, for example, the 100 pip range between $1.30 and $1.31. If we divide that 100 pip range, we will get 4 small quarters from $1.30 to $1.3025, $1.3025 to $1.3050, $1.3050 to $1.3075, and $1.3075 to $1.31. The small quarter points, $1.30 and $1.31, $1.3025, $1.3050 is also a half point of that 100 pip range. And we have $1.37.5 and $1.31. So this is the example of 100 pip range there. That also gives you the small quarters. The quarters theory offers universal, constant, and familiar price ranges that allow quick and precise price analysis of any currency pair. No matter what the exchange rate, we can analyze very quickly any currency pair. The quarters theory provides traders with the ability to locate in a matter of seconds the exact 1,000 pip range, the exact large quarter of 250 pips that the exchange rate is trading within, and also with even further precision, we can zoom in, so to say, and find the exact 100 pip range that the exchange rate is trading within, and even with even more precision then, we can zoom in even further and find even the smallest quarter of 25 pips that the currency exchange rate is trading within and is positioned at any given time of our analysis. The following is an example of a price analysis that we can quickly utilize by what I have shown you already. we can take a look at the exchange rates of three currency pairs using the methodology of the quarters theory. At, let's say, particular exchange rate, let's imagine that the euro-dollar exchange rate at this point, as we speak, is at $1.2345. Okay, can we quickly find out where the 1,000 pip range that this exchange rate is trading within? That will be the 1,000 pip range between $1.20 and $1.30. Which large quarter is the currency pair's exchange rate, the euro-dollar, at the $1.2345 trading within? That would be the large quarter between $1.2250 and $1.25. Now let's zoom in even further. What would be the 1,000 pip range? At the $1.2345, the euro-dollar currency pair is trading between $1.23 and $1.24. Those are the whole numbers that define the 100 pip range there. So if we zoom in even further, at $1.2345, what would be the small quarter of 25 pips that the euro-dollar exchange rate in this example would be trading within? That would be the small quarter between $1.2325 and $1.2350. Let's, for example, take a look at the dollar versus the Japanese yen at, let's say, 96.78 yen. What would be the 1,000 pip range that the exchange rate is trading within in this example? That would be the 1,000 pip range between 90 and 100 yen. Thank you, by the way, guys, for the feedback. I appreciate that. It's going to get even better. Stick with me here. I'm just giving you and laying down the basics right now. It gets a lot more interesting. So I got a lot more to show you, but thank you for the feedback. The dollar versus the Japanese yen, let's say, is 96.78 yen. That will be the 1,000 pip range between 90 and 100 yen. What will be the large quarter of 250 pips? That will be the large quarter between 95 and 97.50 yen. What about the 100 pip range? The whole numbers between 96 and 97 yen. How about zooming in even further to see the smallest quarter? That will be the quarter at 96.78 yen. That will be the small quarter between 96.75 and 97 yen. I'm getting a question based on the quarters points. What are the methods for a trade entry? Let's not get ahead of ourselves right now. Let me give you the basics right now, guys. Let's practice a little bit because I know this is very new to a lot of you. And I just want to spend some time as far as introducing this in today's webinar. And next month, we're going to talk about practical applications of what I'm showing you. Okay? Let's take a look at the example with the Aussie versus the US dollar at 0.7134 cents. That will be the 1,000 pip range between 0.70 cents and 0.80 cents. What will be the large quarter then? At 0.7134, that will be the large quarter between 0.70 cents and 0.7250. What about the 100 pip range? At 0.7134 exchange rate, that will be the 100 pip range between 0.71 and 0.72 cents. And then the smallest quarter would be 0.7125 and 0.7150. I would suggest, if you're interested in the quarters theory, that you do this type of a practice from now on so that you can get even more familiar and begin to recognize these 1,000 pip ranges, the particular large quarters that the currency exchange rate is trading within, and the 100 pip ranges as well as the small quarters that a currency exchange rate is trading at any particular time of your analysis.